Okay, guys. Good morning. So, welcome. Just gone 8:30 on the 2nd of February, and sure you can all see from your charts the fallout that we're having now in equity prices, being led by Europe. Certainly, Euro stocks here, top left, you can see opening, gapping lower, and all morning just going in one trajectory. We've got a break of yesterday's low in Euro stocks that comes in at 2987. We're just trying to find our way around that now. Might come back up to S1 or 2995 to take it. So risk off in a way. I was talking to Anthony and I was saying, well, it's amazing this is happening now. This is really what we were expecting yesterday after the US, terrible data out of the US yesterday, but it was really hard to trade on the S&P. Here's where the data came out yesterday. We went down to the pivot level, but since testing that pivot level, only fired higher. And this was the S&P following European equities. I'm still not convinced on what was really driving these European equities higher as we went into the overnight session. Draghi was speaking, but there was nothing that clear in terms of his outright support for risk assets or super dovish. So that move higher yesterday in the S&P certainly took a few of us guys by surprise and made trading pretty difficult, to be honest. Anyway, now we're getting the move lower. We're going back towards that pivot level of yesterday in the S&P. That comes in at S1 this morning. So a general risk-off tone to bear in mind. Now, this comes overnight, of course. It's amazing how these markets work. This comes after some absolutely awesome earnings from the tech sector, from Alphabet, set to become the world's largest company. So shares closed up 1% on the day, 770.77. This is a look at the Alphabet Google adjusted stock price. So of course, like many other assets, taking a hit over December, but we're back towards those all-time highs in Alphabet. So very good results out of the US. European equities still hitting lower now. Having a look here at the Alphabet headcount, fantastic growth here for the company. So unsurprisingly, due to become the world's largest company. However, this is an interesting point that I'd like. I don't know if anyone's read. Forget the title of the book now. It's Robots of the Future. It won the FT Prize of last year. This is a concern, I think, longer term. If you just think outside the box slightly, if this is going to be the world's largest company, does it not worry anyone else in this room that they'll only employ 60,000 people? The world's largest company, let's say if it used to be GE or if it used to be ExxonMobil or if it, they would normally employ 600,000 people. What we're seeing in terms of the move into the technology economy, I believe, is the wealth being made by fewer and fewer. 60,000 people isn't a lot of people for the world's largest company. And just long term, I think it's interesting to look at this from a employment structure point of view. World's largest company, just 60,000 people. Anyway, how Google makes all of that money from the ad sites, and definitely not in paying tax, as we all know. But yeah, it's interesting, the deal that the UK government's come up with them for the 130 million payback. It really is a drop in the ocean, as these results show. So yeah, Alphabet just about, this is the main chart, isn't it? Alphabet now just about to overtake Apple, or have now overtaken Apple in terms of the world's most valuable company. Not that you would think those results were what the market is moving off now. Euro stocks retesting that level 2987, as I quoted, continuing to push to the downside. Why is this happening? Well, we've been here before, haven't we, guys? Look at what happened to the oil price overnight. Equities taking another lurch lower again. Trading oil again yesterday, pretty tough, to be honest. Very whippy market activity. We were held in support at S1, that was 32.80. We were then trading around. I kept on looking for a break of around 32.11 yesterday. It didn't happen. We then got back to S2, trading that break lower. Lily, you might remember I was doing that when you were here. It was also very messy and very difficult. Overall, though, the price is back towards $30, and that's taking some of the steam out of the equity markets. But also, creating a real mess in the FTSE today. Let's just have a look at the FTSE. And the FTSE is suffering poorly today, trading on its lows as I speak, as BP profits halved due to the slump in oil prices. So BP really taking a hit there. So BP is 4% of the whole of the FTSE. The oil and gas sector is 12.5%. Sorry, BP profits didn't halve, their revenue halved. BP profit dropped by 91% in these figures. A disaster for BP. Their shares are now down well over 6% on the morning. This is a real worry for the S&P as well. Why? Well, because we've got ExxonMobil, top 5 company in the S&P. They're releasing their earnings result pre-market. So that'll be coming out before 2:30 today, ExxonMobil. These oil and gas companies are getting slaughtered. Interestingly enough, from a behavioral point of view, I'm sure you know, and I know, many people over the last few months, or certainly a few weeks, that have been bottom picking oil and gas shares. Hands up, who is it? I know there's some people in this room. Piers Curran, in fact, isn't here now. But anyway, some people have been bottom picking oil and gas shares, and it's understandable why. You know, the price of oil in the long term, and this is a long-term trade, should and will recover. I just think it's a very hard thing to do in order to predict when these companies can return into the sort of levels of profitability that we have become used to. Overnight, what else is there to dictate this move lower in European equities? We're still going, you know. This is a decent morning. S&P breaking below its overnight lows. You can see that here. That's 1918. Do you remember the level yesterday, 1922 in the S&P? Try and keep that. These are the levels that you need on your S&P for now. Looking for the rebound, if you get 1918, 1922, 1925.75. Also, what you might find useful, well, I mean, it probably has been useful. I haven't had it on yet, but it's a Fibonacci retracement on the high yesterday, that strange push higher down to the lows. This is really what we were expecting yesterday after that US data. What happened overnight? Anything to cause this fall? Not really. Royal Bank of Australia held rates, not as dovish as perhaps expected. EU stocks, no macro data. DAX now pushing down to the lows as well. Shanghai comp actually closed yesterday higher. But be careful now looking at the correlation between what happens in China and what's going on in the rest of the world. The reason for that is next week it's the New Year's holiday in China. And very often in the week leading up to the New Year's holiday, you will see cash injections, you will see liquidity going into the equity market just to stabilize everything before the whole of China has 1 week off. I wouldn't like to leave a position of risk on the Shanghai comp during that week, to be honest, and then open it up in a week's time. But anyway, also China has stabilized somewhat on the FX markets, and renminbi stabilized somewhat, so that's out of the limelight slightly. So China had an okay afternoon session, but everything else was pretty bearish. European equity markets again falling. This is a really bearish start to the day, guys. I know Bax is telling me a few of the system guys are on the stack short. Well done. This is definitely that kind of momentum move that we've been looking out for. I did try to trade the S&P short this morning. I just took it off and got in a bit of a mess in the orders, and unfortunately haven't been able to get hold of this, but I hope you guys have. Busy day, so looking towards the data for the rest of the session. Actually, from now, it's relatively light. Just in 10 minutes, though, we've got German unemployment. That's coming out at 8.55, expected minus 8,000. German unemployment claims rate, 6.3%. Otherwise, it's relatively light on the data front until we get the API inventories coming out this evening, 9:35, as you all know. Now, that API data will be interesting. Do you remember trading oil last week of the DOE data? Actually, oil, that's really when the rally started, wasn't it? Look at your chart. When did the rally in oil start? It was a week ago tomorrow. We had API data that came out really negative. What date am I looking at here then? 27th of January. There. So 26th, we get the API data overnight, showing a much larger build than expected. 27th, we get the DOE data. We're still trading at 30.35. Do you remember we came back and tested the pivot level, perfect classic, and it was after that that we really started to have gains. But here we are in oil, back down to almost trading $30 again. this ultimate rebound that people might be looking for, too early to have this now. The supply is still too high and the market fallout too high. Just in other news, guys, today, talking about Europe very quickly, we're supposed to find out what the text is that has been agreed between Tusk and Cameron that gives Cameron at least something to shout about in terms of what he's been able to achieve to help the UK avoid a Brexit. It's very interesting, to be honest, a number of things. Obviously, the main thing being to allow the UK not to have to pay benefits to EU migrants is one law. Another law is, I know Theresa May is very keen on this. At the moment, if a non-EU national marries a UK citizen, they don't get UK citizenship, they aren't allowed to receive the benefits. But let me be more clear, they aren't allowed to receive such social benefits. But if a non-EU citizen does marry an EU citizen and then they move to the UK, then they receive all the benefits. And apparently, Theresa May is worried that this is quite a big sham that's going on at the moment. My advice to Cameron is beware. It's weird, isn't it? If you look at the votes for the in-camp and the out-camp at the moment, both arguments seem to think the date is 1990. I can't find anywhere the out-camp saying, just actually referring to the troubles that the EU is in. And I actually think, that's one of the biggest things at the moment. One of the EU politicians have said the Eurozone house is burning and the Brits want to come in and rearrange the furniture. And this is an interesting point because it's a strange time to argue for these changes when the EU does have significant problems of its own. I actually think it also, to me, as a Europhile, if you like, I believe we should be staying in Europe. I think the fact that the Eurozone is in such difficulty, I think Britain might get a better deal if now it showed its strength and camaraderie rather than its sort of tantrum wanting to leave. Look, the thing about Britain, if you look back over the last 150 years, no matter what happens in Europe, Britain is involved. In the end, when things get messy, we're not an island, we do get involved. And if we leave, and if the Eurozone does suffer severe consequences, and if the Eurozone does fall apart and governments move to a more nationalistic stance, history has shown it that it's not a good position for anyone to be in, whether Britain's inside the Eurozone agreement or not. And I absolutely understand the out camp. I mean, a lot of my family, parents and sisters and brothers, very much on the out camp. I understand their views of just £1 billion a week that the Eurozone costs Britain and the mess. You couldn't have a larger non-functioning bureaucratic entity than the EU. I mean, it really is atrocious. But whether leaving it is the right thing to do or not, we'll find out. Anyway, today we get to find out what Tusk has agreed with Cameron, and Cameron's now got to try and sell it to his Conservative Party, saying, look, chaps, look what I've tried to agree, look what I've managed to get. And if there's nothing significant, then unfortunately Cameron would have failed and a Brexit creeps ever more likely. All in politics is not bad news at the moment, from my point of view, however. I'm sure you've read this morning. Donald Trump has been trumped, and Cruz wins in Iowa for the Republican race. So I'm looking forward to see what Donald Trump comes back and says about this. Interestingly enough, Donald Trump's rhetoric is very much about, I'm a winner, you want to back a winner, and Americans love backing a winner, don't they? It's all about, who's the number one, who's the fighter, who's the winner, and that tends to form a critical mass. He just lost. So let's see what happens on that front. That's it for me, guys. I hope I've not stirred you trading that last bit of market volatility on European equities. Risk off at the moment. Keep an eye on oil, just trading above the $31 handle. Relatively light on the data front today, as I explained. We've got German data coming out in 7 minutes' time. That's the unemployment rate for the month of January. Have a good day and good luck with the session.